Tax return tells the truth about how you're doing. And it's like the MRI of checking your body, right? It's like a way to be able to see whether you have other needs. Do I have a bad knee? Do I have a bad back? When I have my blood test, does it tell me, do I have high cholesterol, low cholesterol, high HDL, so forth? So as you look at taxes, it is a great barometer. It's a great insight into how the family's doing. If you're making a lot of money and you're taking a lot of capital gains, thinking that you're paying 20% on those gains, you're probably wrong, right? So, looking into things, when should you do a Roth conversion? When should you not? If you're in a low income year, Roth conversions make a whole lot of sense when you're at a low tax rate. When you're at a high year and you're making a whole lot of money, Roth conversions at 40% marginal rate don't really give you a whole lot of value, right? And it depends on where that money's passing down to. So if it's going down to your kids and they're at a lower tax bracket, then maybe that doesn't make sense. So working through all these issues are really critical to be able to really understand what's the tax return telling us and what is it telling us we should do more of and what's it telling us we should do less of. And if we're able to listen to it, and I love visuals, we use Holistic Plan and it has visuals. So when we sit down with a family, it shows here's your overall tax rate at this income, here's your marginal tax rate. Well, for every added dollar that you earn, how much you're going to receive. That's a great way to be able to show a client without getting into all the numbers or driving them crazy or sitting down with them and telling them, hey, you got to understand this form or that form. You don't want to do that. You want to sit down with them and you want to spend time going over what is needed that will help them understand where can they save money? Where can they defer money? Where can they add to the overall Roth? Where they can do post contributions? Where can they save on medical expenses? Why is the match that their employer's providing not part of their overall income? There are certain things out there that are so valuable if you understand how to basically leverage them. And our job is to get you to those valuable things.